Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is John Lehner, president of FundGuard, a software as a service platform for investment management and administration, which he joined 2 years ago after 20 years in operations technology at both State Street and BNY Mellon. His mission now is to persuade the asset management industry and its service providers that they can transform the cost-income ratio of the industry through a superior and, importantly, scalable technology and operating model that is very different from lift-outs and outsourcing. John, thank you for joining us.
Dominic, thank you very much for having me. Pleasure to be here.
I've read a lot of material on your website and elsewhere, and I suspect some of the listeners to this podcast, viewers of this interview, will be asking themselves, what is FundGuard all about? So perhaps I could force you to categorize what you're doing a bit to start with. I mean, is FundGuard a technology story? Is it an investment management operations outsourcing story? Is it a cloud story? Is it a story about scale and cost and speed to market, or is it something completely different? How would you pigeonhole yourself, if that's not too embarrassing a question to answer or to ask?
Yeah, no, thank you for the question, Dominic. At the heart, FundGuard is a software firm. That's what we are building. But we think the benefits of that go far beyond, technological improvements. Looking at the inefficiencies and fragmentation, as well as the legacy technology that's been out in the industry in some cases 40, almost 50 years. We think that the root of addressing scale and addressing modernization starts at a very low level, a very granular level. And so, we are choosing to attack all of those, issues from the bottom up by building out, our new, software platform.
You were, of course, at Eagle Investment Systems, so you were at the heart of the lift-out stage, which the investment management industry went through at the turn of the century. How does your model, the model you're offering now, differ from those old-fashioned lift-outs and possibly more old-fashioned outsourcing contracts?
Yeah, back then people were literally lifting out and moving machines and people because they were all physically in a location, right? Which speaks to the lack of scale and the challenges with those. At the core, we're providing software as a service. It's a subscription-based, consume as you need, type of model. So from a portability standpoint and a future proofing of an organization, we think it provides a much better way for people to access technology versus, the historical racking and stacking, and then, the subsequent, as you point out, lifting and shifting, that would go with that when people wanted to move to a service-enabled model. So, it really speaks to the availability of, the current state technology and what it offers the industry.
Software as a service hosted in the cloud at one level seems quite familiar, but the way you talk about it indicates it's not something that familiar. In fact, is there a sense in which, if this software as a service takes off, that you're actually going to end up hosting and indeed curating an industry utility of some sort for the asset management industry?
Yeah, we think that's what we're being asked to do, Dominic. I mean, when we speak with folks in the industry, asset managers, they're asking for, is something that is much more scalable and leverageable. We're very fortunate that, in the area that we operate in, highly regulated, highly audited, and standardized. So therefore, the ability to aggregate that and provide it in that type of a utility model, we think is right there, and an opportunity that we're being asked to address, by our current clients.
You said right at the outset that you're looking to engage with the service providers to the industry as well as the asset management industry. itself, and presumably data vendors and vendors of other services will be part of this. What's the best way to describe your model once it's reached a certain state of maturity? Are you in effect offering a kind of service exchange, or are you building an ecosystem of different providers and buyers who are operating in this marketplace? Are you offering, this is another term which is possibly old-fashioned, a kind of platform, kind of .com era platform, or is it simply a network which you're linking together more efficiently? What's the word which you would prefer to use about what you're building?
Yeah, those are all interesting terms, and there are areas of each of them that we would apply to what we're doing. But ultimately, what we're looking to do is to provide an integrated ecosystem, for the industry. If you think outside of our space that we operate in, and you think about the likes of what an Amazon does or a Salesforce does, which is to provide a core a platform or a core offering upon which not only the primary vendor or supplier, but then third parties can come in and interact. It's even something, if you go back to what Bloomberg looked at 25, 30 years ago, when you see all of the different participants that transact and network and really leverage a type of platform. So I would say an ecosystem is probably more the right way to describe what we're going after.
I'll stop trying to persuade you to pin labels on yourself. The fact that many of these words are relevant indicates the novelty of what you're trying to do in a way. But whatever is the right term, and you've just selected ecosystem, you've got these different sorts of entities who are going to get involved in this: asset managers, obviously, custodians, fund accountants, transfer agents, data vendors, and so on. Now, could you tell us a little bit about each of those groups, if you like, those types of industry entity? Why are they going to join this, and maybe who's joined it already?
Yeah, fortunately, we have participants from all of those groups that we're working with, and that we have agreements with, and are in various stages of production and rollout. And I think they all are looking for a lot of things in very, very similar benefits. The first being, they all suffer from significant inefficiencies in their current approach to addressing their core processing in their front, middle, and back office. And I think when they look at the legacy deployments, they're very expensive. Many are coming to or beyond end of serviceable life when you look at the underlying technologies that they're on. And I think they're looking for a way, why do they join? I think they're looking for a way to future-proof this area of their needs around software and providing complex accounting, which is so important to other applications and aspects of their business. So I think that's why they join, and really, again, going back to what we're looking to create. When you talk about something that we talk about the word utility, really is the opportunity here to do more than what you could previously do. People attempted to do it, but it was really difficult to do when the majority of these firms today run legacy on-premise technology, right? Now, having one code base with multiple clients all sharing opens up lots of possibilities in scale, reusability, and leverage that you just couldn't accomplish historically, as hard as everyone tried. Just inherently difficult to do.
You've got some pretty big brands working with you. You've got Citi, State Street, Six, Ultimus. What's been the attraction for them specifically?
I think it's our focus on this, and I think or other organizations that are out there today, looking to bring new technologies into the space are generally attacking industry issues that are more symptoms, more top down. People looking at doing things to improve data integration, to improve onboarding or client reporting, information delivery, all important areas, but they're not addressing the underlying challenges of why it's so difficult to do all of those things. And so I think what these organizations see in us and others see in us is our focus to really get in there and dig in way deep below the waterline on very significant technologies and requirements that have a way of changing and modernizing from the bottom up. I mean, that's really, I think, what they see and really what we're focused on.
Well, changing and modernizing from the bottom up. When I first looked at Funguard a year or so ago, what got me really excited, and this is probably a measure of my sort of nerdish personality, but what really got me excited was fund accounting. It looked like you could revolutionize fund accounting. And up to that point, we had all assumed that fund accounting was invulnerable to technological change. These fund accountants were going to sit there till the crack of doom, cranking out net asset values. Now, why? A, was I right to highlight fund accounting as an early important factor in your model? And B, if it was, why did you choose it? What was the opportunity you saw there?
As you were just describing, I can't help but picture that scene from Monty Python with all the accountants there. But anyway, I'll pass on that. Listen, you know why? No one's doing anything about it. It's been over 25 years, which is not one, but two generations of technology since anyone has done anything about modernizing accounting. And, on a one level, the accounting requirements continue to evolve and get more complex, but people don't need new accounting per se. But what they do need is modern technology that enables them to be able to integrate complex securities, crypto assets, derivatives, and not have to, develop off-sheet workarounds. They need systems that can handle the volumes of data, being inherently cloud native big data application that are then in alignment with other things that they're doing, downstream. And so when you really start picking away at it, it's one of, if not the hardest thing to dig into, and it's not to be underestimated. And unfortunately, doesn't get many people excited. And there's, generally a view that there isn't a lot of value add around it, which on one level you can understand because functionally it either works or it doesn't work. But when the cost of supporting it and the risk of supporting it becomes the story and the bigger issue than the underlying functional, capabilities, then there's a real problem there. And there has been, for years. So, that's why you have to go after it. And it's a significant body of work, that takes years, which is another reason people kind of bypass it. There are many other things that people could go out and accomplish faster and build applications and be in the market in 3 months, 6 months, 9 months. Accounting is not one of them. So therefore, it's not something that people generally gravitate towards.
As you say, nobody's really done anything about fund accounting for 20 years. Most of the systems which these large banks are using are old by the standards of digital technology, but they are also using more than one of them. I'm sure if we went into a large custodian bank, but as a result of all these outsourcings and lift outs, they're using several of these fund accounting engines. If I said to you, as a result of your investigation, what do those current fund accounting engines do well, and where do they fall short? What are they doing badly?
Yeah, well, they're all functionally rich from the generation in which they were constructed. So, if you go back to their core asset classes, if they were built 25 years ago, 30, 40 years ago, they generally have years of enhancements and are robust in working in providing the underlying core accounting functionality. What we hear from the market that they don't do well is, number one, they don't have modern workflows. They don't really, they're not organized in a way that aligns, with the way our user experience can operate today, or the way the workflow can be, disassembled or distributed. Number one. Number two, they don't handle modern requirements or new security types. Generally speaking, when people get into a new asset class, they're either doing that on a spreadsheet or, to your point, standing up a second, third, fourth, fifth, in some cases 12 accounting systems to be able to handle the array of not just asset classes, but jurisdictional and regional requirements. So, they don't do well. They don't upgrade well. They don't enhance well, because all of them are built from a time and an age where the way you wrote the code, developed, tested, and deployed a very waterfall approach generally takes years for someone to get a new piece of functionality that was determined to be necessary today. Actually having that in production probably can be 18 months to 2 years in most cases. So they don't do that well either. And certainly that's an issue for all these organizations. To be able to address those areas.
They don't upgrade well is the understatement of the century about fund accounting engines. I think the entire industry still is haunted by what happened in August 2015 when BNY Mellon had a NAV outage, the ultimate nightmare for a large fund accounting shop. Precisely after a FundGuard upgrade backfired, the regulators got involved. Is that one of the risks which you think that you can mitigate? You can make upgrades less dangerous, because I'm sure it's a source of conservatism in this area. Is precisely nobody wants to repeat that experience. Yeah,
I mean that was a big driver for the creation and the start of FundGuard, and really working with clients who really want and need a contingency NAV capability is what we set out to do initially. And also, being a multi-cloud, vendor, so that we offer the software on multiple, cloud platforms, does mitigate, this risk. And I'm not sure the industry ever really recovered, from that spectacular 1 week long. I was, in full disclosure, I was working at BNY Mellon at the time on a what became a very shortened vacation that exact week. So we think about that and look at that, and that's part of our the cases that we use in engineering, designing, and building and deploying the software.
If I was a vendor of a fund accounting engine, should I consider FundGuard a threat to me or an opportunity, or neither of those things, or something different? Are you going to disintermediate them in some way or put them out of business?
I think the answer depends on who you are and what your future looks like, and what you really think you're going to do well. There are not many pure accounting vendors out there. Generally, many have morphed into some form of attempted, in some cases almost Frankenstein-esque. Well, I shouldn't say Frankenstein, but Frankenstein's not the monster. The monster, type of platform. And so if the goal is to say, hey, I actually do some things as part of this offering well, but accounting's not one of them, I think it's an opportunity to help them modernize or plug in an accounting capability. So I think that answers up to those vendors, that are out there, assuming they're actively, building a cloud native, platform, from the ground up.
I'm going to ask you some very futuristic questions in a minute, but before I do, what's your, you've invested a lot of time and effort in fund accounting. What are your priorities after that? What comes after fund accounting?
So, the journey for fund accounting, I don't think it ever ends, Dominic. I think what happens is fund accounting, if you think about it by jurisdiction, when you look at North America, you look at versions of it for UK and Europe, and then you start looking across other jurisdictions. It's potentially a lifetime journey because it's one of the things that is a pain point for our existing clients and folks that we're speaking with, which is to your earlier question. They're generally running a half dozen or more software packages over multiple actual instances of those to get scale. So I think after fund accounting, more fund accounting comes, and then also reaching out beyond sort of the traditional assets and continuing to specialize in the adjacent areas. When you look at most of the fund accounting platforms that are out there right now, sitting next to them are platforms that are either doing private equity assets or doing some form of alternative investment fund administration. So those are the areas that we get asked about the most when people sort of draw the scope of what we're doing. But that's really going to be the work for the foreseeable future.
I was hoping you were going to start waxing lyrical about accounting books of records and investment books of records.
Yeah.
Are these on your list? Are you going to help produce ABORs and IBORs?
Yeah, absolutely. I mean, we're actually having this conversation internally right now. Those are antiquated terms based on technology, technological limitations, or speed, the ability to be able to do either real-time accounting or needing time to do settlement-based accounting. And then everything, the shades of accounting in between of what people call record keeping, investment, accounting, IBOR, ABOR, and so frankly, we are working on trying to best explain to people that you really need to look at accounting as a stateless data source, and our ability, which we have today, to do multiple views of that already exists and is how we're building it from the ground up. Because that's another dimension, if you think about it, along with regions and asset classes, are the need for the organization to have start of day trading cash positions for front office, but then settlement books for true accounting fund purposes and everything in between. So we're already addressing that now, and we'll continue to dive into it. But we need to come up with a better way to communicate it, because we're not replicating the legacy models. We've actually changed it again because of the availability, or I should say, the removal of the inherent limitations around cost of processing and storage and compute and time to market. So there's just a lot of things you can do now when you're working on a modern stack.
It's an important point you've just made that Funguard is not looking to be the next SimCorp or SunGuard. It's actually looking to reinvent things. And in that context, when I first looked at Funguard, I was very struck by references to artificial intelligence. This was long before we'd heard of Chat GPI, and it had become, taking the place of the metaverse as the most talked about technology paradigm. But my question is, how important is artificial intelligence to the model you're building?
It's very important. When you stop and think about one instance of software with all of the clients, utilizing that, and then having all of that data available, then to go in and optimize, workflow, address issues like anomaly detect. There's so many ways that this can go, and then on a predictive basis to really drive. It's not even efficiencies. It's probably as to yet unthought of advantages from the technology. We get really excited about it, and again, we get excited about it because underlying what we're building doesn't have to take or go through any sort of unnatural steps of storage and repositioning, and then migration to be leveraged by it's native for us. Like that's when you look at these tools and capabilities, they're there now. We're leveraging them now. So we think that's going to be a big part of the story, and ultimately, again, is where we can do accounting more efficiently, right? And just continue to drive out the risk and the cost with this processing that our clients have to deal with.
Can I ask you to elaborate on that comment you made a moment ago? That, this isn't just about efficiency, and there is a temptation in this area to think, well, we'll just carry on doing what we're doing already. We'll just do it cheaper and at lower risk. What you're describing is something which that's a component. Who doesn't want to be more efficient? Who doesn't want to save money and pocket and keep pocketing those gains? But am I right to think that you're really talking, as you talk about data, you're talking about revolutionizing the asset management industry? You're talking about a new source of alpha here, whether that data comes from hidden sources out there in the marketplace, or whether it comes from data which asset managers possess but don't really know that they possess it.
Yeah.
Or do.
Yeah, and it's also thinking about what comes next with new technologies. It's kind of interesting that a lot of the activity and excitement around blockchain distributed ledger seems to be momentarily eclipsed by people's excitement, or the perpetual excitement around new data tools and capabilities with the newest and most fascinating data storage and data access technologies, which are there along with AI. So those are great. But think ahead. If you're starting from scratch today, which is ultimately the question you have to ask yourself, if you're crazy enough to build an accounting platform, you've got to say, well, the future is not going to be what clients are dealing with today around daily batch and file movement. It's going to all be distributed technology. It's all going to be real time. And so, that's our use case. Those are the requirements that we look at. And we're just fortunate because, we are starting from scratch. So therefore, that's an advantage of this. It takes time to build it, takes time to deploy it. But we see significant changes. And again, think about accounting information just being persistent, just as always available and persisting, not as this, very clunky, process of movements and calculations and transfers across numerous hops, steps, applications, data stores, and, really arcane, technologies. So that's really what we're thinking about here.
I'm glad you brought up distributed ledger technology, because it prompts a question in my mind about how you are preparing to support asset managers as they start to invest in digital or tokenized assets. And there's a high level, almost intellectual problem here. Is it at that very high level, you can understand that digital technology is in the end always about data. It's kind of useless in itself, but if it's processing data and revealing insights by using data, that's incredibly valuable to asset managers. But and maybe you can comment on that. How in your mind digital technology meets data. Is it very clear? You've begun to talk about this during this conversation, but do you have a very clear definition of how data meets digital technology meets distributed ledger?
Yeah, let me give you an example. It's a pretty rudimentary example, but one we get on a pretty regular basis. Today, people that are working in crypto assets are taking something that is already a real-time ledger-based and dragging it backwards 40 years, truncating it, chopping off the decimals, rounding it, reducing it to some sort of a batch load process, and then trying to come up with a bastardized asset class to shove it in to make it work to sit alongside of, all these other, assets. So, I mean, we're watching that today. And if they can do that with an existing system, they're fortunate. Most aren't even able to get there. They're needing to do it, offline. And so we start with that and say, well, that's the asset class we have to look at, whether it's the underlying technology of how all assets ultimately are structured and are delivered and moved, or it's an underlying asset class itself as an actual crypto, asset. So we're looking at that natively, saying that's what we're building to, today, and understanding that I don't know what it is, 80-90% of the workflow of asset managers and even the custodians today is not digital. And the way people are approaching digital, again, is generally top down. That's why there's such a great, robust market for all these great tools that allow you to put your data in a cloud and allow you to do other things with it. But at the end of the day, you're only as fast or as strong as your weakest link. And that link is really weak, way down in the bowels of all these organizations. So, for us, again, I know I'm repeating myself now, like you have to address it from there. It has to be done, because just porting a legacy technology into a container and shoving it on the cloud and calling it cloud enable it's good, it's efficient, it helps with your, maybe your racking and stacking bill, but it doesn't address any of the issues that I know you are very fond of in terms of, the true digitization of the industry.
Mm-hmm. Can I ask you, this is a massive question, but if I said to you, is what you're building going to support investment in digital, and to be specific, in tokenized assets? And if I give you it would take a simple asset like a fixed maturity, fixed coupon bond, and this can be issued as a digital asset. A smart contract will adhere inside it, so the coupons are paid, the redemption is paid. It's all effectively code. It becomes a self-serving asset. Yeah. That asset can also be broken up into lots of little pieces, which enable investors to achieve at quite low levels of assets under management to achieve particular exposures. Is a digital asset, digital assets as the future of portfolio management, part of the way you're designing what you're building?
Yeah, I would say to you, we are waiting for that eagerly, as opposed to the way we're just like everybody else, forced to deal with the legacy chain of asset, manufacturing, distribution, and then all of the data sources that one needs to go to, and the fragmentation of that, and what our industry has been tackling forever, which is the data standardization of things. Well, it hasn't happened, and people have been talking about it for years. But now you have a technology, and now you have something with tokenization that we can't wait for. We can't wait till that happens. It's going to be really something that will enable us to get even more value out of our platform for clients. So absolutely, and we've looked at it today and eagerly await it, want it, and I think would have even additional benefits than what we can appreciate in terms of what else this unlocks, right?
You used an interesting term a few minutes ago when you used the term persistent. We were talking about NAVs, in effect. You don't have to turn these out once or twice a day, but these persist through time. They're just always available. They're always there, and they can inform other ways of looking at your portfolio, at the risks that you're facing. And you've also used this term, a single source of truth. And clearly your vision here of the data which asset managers and the service providers use and make use of every day encompasses a lot more than fund accounting.
Yep.
Do you have a very clear vision of how far this vision of the future of data in the asset management industry can actually extend?
Yeah. I'm going to answer that question by going back to a question you asked earlier, like, how do we see ourselves, positioned here? And that's why I use the word ecosystem more so than even platform, right? Because if you think about an ecosystem, it's not, it's a group of organisms and a functioning, system where everybody is integrating or contributing. And so we believe there are some places where you get a single source of truth because there may only be one source of something, right? So in the rare case where there's only one price or one source for a particular item, then you're great. But we believe that accounting, because accounting is standardized, if we get to that scale and utility model, then we've got the benefit of that scale, should then be in a position to attract additional data to wrap around or enrich, the underlying information. There's so much necessary to support the accounting workflow and process that you get significant ways, to providing a source, in an organization. In fact, the accounting we generate becomes a source of data, just like you get data sources from exchanges or analytic providers. So what we believe is we will not be the ones generating all of this. But what we do believe is if with scale and a utility model and collaboration, which is the key word, that we can really progress this to a point that no one else has been able to do it, thus far. So ultimately, the vision works where it's an ecosystem we're building, but also the things that we're building because of the nature of our cloud platform allows for integration via our APIs, allows for loading of additional data because we have the big data capabilities there. So we think it just makes sense that would be a logical place, and people are already asking, well, if you're doing this for me, can I add this? Can I add that? In some cases, it might be us adding it, but in many cases, it won't be FundGuard. It'll be other existing, sources, vendors, that we bring into this, ecosystem to provide, the broadest possible view into a single source of truth for everything, that's out there. So that's really how we think about it. It doesn't happen overnight. Like I said, there's still quite a bit of work for us extending across assets and regions. But we do think that, we get there because of the approach of the collaboration across the industry.
You used the word collaboration there. You also used the word scale. You also said nobody's been able to do this before. So perhaps I could ask you two questions here. What do you mean by collaboration?
Yeah, so with collaboration, let's start with accounting. Everyone in the industry would say there's zero value add in accounting. You've got to do it. It doesn't differentiate yourself because it's regulated, it's audited, it's highly standardized, but everybody needs it. So therefore, why does everybody buy, build, customize their own accounting systems? Like before they can even get to a digital strategy, a data strategy, or anything more value add and complex, they are hampered by their own ability to say, well, how well can I do this? How efficiently, can I do this? And how much of my budget does it eat up? And the answer is it eats up way more than it should. So, and then you think about the core technology of what cloud does. It enables people to work together in a way that they just couldn't before, right? It was just, not that you couldn't, it was too complicated, too hard, expensive, and there's too much lag relative to what you can do now. So when you ask it, again, to one of your earlier questions, are you a software company? Are you this? Really, we want to be a utility and a scale collaborator for folks to get to that point. The technology enables us to do that. And, that's really, at the end of the day, what we're after.
I can see why asset managers might want to collaborate on fund accounting. It's less obvious to me why, say, the global custodian banks might want to do that. A former CEO of State Street Bank once said to me, "What we are really is fund accountants." So if that ceases to be the business in which they compete, and indeed there is competition for fund accounting contracts between an ever diminishing group of banks, but there is still that competition. It's a market which doesn't work very well because it's quite difficult to leave one platform and move to another. But I'd have thought the global custodian banks wouldn't see fund accounting as an area of collaboration. They'd see it as an area of competition. Do you have that pushback from them when you talk to them about it?
We don't see the pushback, Dominic, because, what's the old saying? There are no atheists in foxholes. Given the war that's going on over fees and the downward, immense pressure, and we're not even at apex on it yet. We are still getting to the point where the runoff and the migration of traditional managed assets based on traditional fee schedules are just accelerating into new products and significant low to no fee products, and then the underlying cost of servicing them. People are looking at this and saying, the ones that are able to, by the way, because we're seeing custodians who are raising their hands saying, tap out, I'm out of the game here. Others are looking at scale and saying, we need it. And this is not a battle of, I'm doing accounting better than you. Now, you talk about operations, you talk about my expertise, my scale, my service model, what I do with analytics. Absolutely, you can battle out there. But when you look at doing just core accounting, Dominic, it's not the battleground. And it's incredibly painful for all of the firms. And most of them share, if not exact, very close, DNA relatives of the same core accounting engines in their infrastructure, different levels of, disrepair. So they kind of already have done that, right? In many ways.
If, as you say, fees are being pressed in a downward direction, margins are being squeezed, scale very obviously is the answer. But if I look back over 20 or 30 years, I've looked at the industry, people have understood that for quite a long time. And in fact, it was a large part of the argument for lift outs and for outsourcing contracts was that you needed scale in this business. In effect, the global custodian banks were going through the competitive process of the market. We're going to deliver scale to their buy side clients. But nobody's made this work before. Why couldn't they make it work?
I think they made it work the best they could based on the available technology they had, right? That's really the answer, and that's why that's why it's been 25 years since anyone's been crazy enough to try and think about a new accounting platform. Because what were you going to do? A better version of a database, better client service model? You needed cloud and the adoption of cloud, not just by our industry, but by governments, and to say cloud is here. There are challenges with it, but I need to come to terms and understand it. And rule number one in technology is you've got to follow the big money. You can't battle it. You will lose to it. And all the money has shifted and moved in compute storage, to cloud, right? So that battle and that war is over. So now you look at it and say, well, we need to put capabilities on that inside that technology to help the modernization of the industry, right? And so far we've been talking about the managers and the service providers, custodians, but at the end of the day, it's about the end investors here, right? I mean, they need better products, and they're getting them, but They're going to get more, continue to get more of them, more competitively priced, more access to their data, more, and it gets better, all the way through the life cycle. So, the service providers, fund administrators, custodians, they are scale providers. That's essentially what they do. They rent their scale, to their clients. We're helping them to rent more of it, some of them have tried to do their own large digital transformation projects. I've been around for a few of them at both Bank of New York and State Street, and there are others that are out there. And it's really hard to drive this amount of change inside of an organization that, above all things, requires stability and resiliency as a regulated organization. All we're trying to do is help, the industry through extension to get a faster pace of change than they would get on their own, right?
You've been very articulate about why fund accounting is such a big opportunity, why the answer to it is scale. You've explained why the underlying secular trends are in favor of it. The commercial economics argue for the technology in terms of cloud in particular is in favor of it. And also you've got the end investors out there pressing for some alpha, I suppose, out of operational efficiency. So you've got a lot of things going for you, but dealing with large corporations, there's always going to be a great deal of inertia. There's going to be a great deal of resistance by people who feel that their livelihoods and jobs are going to be at risk. How long do you think it's going to take for you to scale your own business?
Years. It'll take years. Like I said, as we continue to, migrate software into production, for funds and in different regions, it'll take time to then migrate to additional geographies and adjacent asset classes. So it's a perpetual journey, and one that, again, I don't see us doing alone, or we would be successful if we were doing it alone, if we didn't have this collaborative, ecosystem approach. And I think that's really what we're out to prove to folks is that, one, the thesis, it holds water, which it does. Two, you're either doing something about it or you're selling your business, which we continue to see almost on a weekly basis. And then three, here's the new model. Here's how we're going to collaborate and get there. So it takes a while. And then also, not every organization moves at the same speed. I mean, again, these are government regulated, in some cases systemically important in the States, FCA. I mean, you've got regulators all over the world that, are always looking out to make sure that these things work. They're always checking out cloud. They're checking out, risk in the system. So it will take time for folks to make this migration. It's a journey. It's a journey.
John, I have one last question for you, and it's something you've alluded to just now, which is that these are regulated entities that you're dealing with. Regulators themselves, as cloud adoption has accelerated, have started to take an interest in cloud itself as a potential threat to financial stability. What does this mean for you? Do you have to adopt a regulatory status yourself now or in the future? And how would you expect, because this looks like the way it may go, is that cloud providers, Googles and AWSs and so on of the world might actually start getting regulated directly in this area of their business. How is that going to affect what you're doing broadly? How's regulation going to affect you now in the near future?
So based on, my interaction with regulators over the years, this ends up being a positive for them. Number one, you have multiple custodians, asset managers, funds, administrators, all running different levels of technology, platforms, resiliency of varying degrees of stability and readiness. So there's a real risk there, like we talked about with the Boney outage. Okay, and two, regulators deal on a significant time lag today relative to auditing and coming in and monitoring and oversight. If they've got a platform or they have a place and they've got cloud where now the industry is largely aggregating its data, they have the opportunity. We talk about the benefits of applying other tools like AI and things in these data sets. The regulators have already expressed an interest in, well, yeah, we want to make sure cloud's going to hold water. So let's make sure all the cloud providers and there's resiliency and multi-cloud strategies and all that.
John Lehner of Funguard, thanks very much for taking the time to talk to the members of Future of Finance.
Dominic, thank you very much.